I want to understand from you, from an entrepreneur standpoint, what do you think are some of the most common mistakes that you've observed that founders really make at early stages of their startup, and what do you think can be done to avoid it?
Look, there's many ways to do a startup. There's not only one. And so I wouldn't call them mistakes, but here's what I would say. If you build a stronger team, you'll build a bigger startup in the long term. You'll have to make the investment early. It's very hard to hire that talent later. It has to be in the core gene pool of the company. And so it's pretty important to build very strong teams. I don't see as much of a focus on that in India compared to, say, Silicon Valley. So it's pretty important to build the right teams. Investors also tend to take a shorter term approach to revenue as opposed to saying what is truly innovative and disruptive and a big technical advantage. So some factors are less prevalent in Indian investors and in startups. And I hope to see a wider range of startups in India.
Now, failure is often seen as an inevitable part, of course, of the startup journey. But how do you think founders can really embrace failure, learn from it, improve their chances of success?
I would say to people, what looking good isn't what's important. Learning fast, admitting your mistakes early as quickly as possible, and fixing them is much more important than looking good and not admitting your mistakes. Part of that is a culture you set up. So there's a woman called Margaret Heffron, has a great set of books and a TED Talk called Dare to Disagree. So good entrepreneurs will set up culture in the company where even a junior engineer can challenge the CEO with questions. And I think in that kind of a culture, you will discover problems early, you will fix them earlier, and you'll build better companies, faster companies. And I think that culture is somewhat missing in India because there's a more hierarchical nature to those startups instead of anybody being able to challenge anybody. So that's my one piece of advice to entrepreneurs. Don't focus on the investors, focus on your employees and learning from them. Because they're in the trenches every day doing all those things. They probably have lots of good ideas that you can leverage in your startup.
Oh, absolutely. Well said. Now, you do have the likes of Sequoia that have actually exited India and China. They've said that it's hard to oversee portfolio companies across oceans. Do you think VC investing is set to return to the Don Valentine model of funding companies within a small geographic boundary?
I think, look, there's two types of activities in venture. One is investing. And to me, that you can do remotely, but that's all you're doing. You're investing and letting somebody else build the company. The other is to be a venture assistant, really help build a company. So investing is a very different activity for VCs than building companies or helping entrepreneurs build companies. This is why I say I've never been in the investing business. I'm just a venture assistant to entrepreneurs, trying to be their assistant as they try and build companies. That model requires much more interaction. Now, fortunately, some of it can be done now remotely also. But those are very different activities, and not enough entrepreneurs realize the difference between people who are just investing to get a rate of return and people who are trying to help you build a company and think of the long-term, more ambitious vision of what you're trying to do. So those are very different, and I do urge entrepreneurs to think about it hard when deciding which investors to pick as their investment partner.